Mortgage rates hit 4-month lows this week. That is right. We are close to where we were in September when we had probably the biggest drop in interest rates in over 2 years. That was some great news. But you know what? Not all the news was good this week. We did go up a little bit on Thursday. Ended the week roughly about the same as where we were when we started the week, but still good news coming forward overall. Let's get into it. The big three, prices are still up. Inventory is up as well, and then rates are down. So 3 green arrows across the board. That's some good news. I think we all like that. Headline news: Jobs Week did not disappoint this week. Also, the Honolulu housing market, the Honolulu Board of Realtors housing market report came out for the month of February, and overall the numbers were pretty good. We'll get into that. Initial jobless claims spike again, but a little different than the week previous. And then VA rates again at 4-month lows. And we're going to kind of see, we'll talk about why they went up and why they went down, kind of chronologically, and we'll give you kind of a good idea of what's going to happen going forward next week. First, let's start with the ADP jobs report. This is a private sector jobs report that came out on Wednesday, and private sector jobs, they were up 183,000 in January. The expectations was 150,000 in February. Actually came in at 77,000 in February, way lower than what was expected. Small business actually showed a decline in February, and that is really the lowest hiring pace since July of 2024, so almost a year. Wage growth was steady for job stayers and slightly down from 6.8 to 6.7% for people who are changing jobs. A great start on Wednesday with the jobs report. Friday, today, we saw the BLS, or the Bureau of Labor and Statistics jobs report, and the jobs report was expected to be between 150, 160, and that came in at 151, actually 160, 170,000, came in at 151,000, so just slightly below what was expected. There was a negative revision to the December and January numbers, just down 2,000, but still revision lower. Average hourly earnings, they dropped a little bit, but it was a huge drop from 3.8% drop in weekly earnings down to 3.4%. And really, it's not so much what we make an hour, but it's over the course of the week. You can make more per hour, but if you're working less hours, it doesn't really add up. So the big thing, the two parts of the jobs report, the household survey is where we get the monthly unemployment rate. And after going down for 2 months to 4.0%, they actually went up to 4.1% in the month of February. So that was really, really good. And you know what? All of the job gains, guess what? They were all from ages 16 to 19 years old, over 80,000 new jobs. But for everybody else, everyone above 20, jobs fell 667,000. So let's get into the Honolulu Board of Realtors housing update for February. We hit a new all-time record, raise the roof, everybody, for median sales price for single-family homes. 1.185 million. We are approaching 1.2 million, and I think we'll get there this summer. Median sales price for condos, so down to 494,000. So that was a pretty big drop. And overall, closed sales, comparatively speaking, month to month and year over year, were down in January, largely because, hey, January we had high rates, interest rates, so we see a big drop. There's a couple of charts in here we're going to go over. You'll see kind of what the impact of those higher rates are. So let's look at the monthly indicators. Closed sales down month over month, 196 down to 167 for single family homes, down 312 to 293 for condos, about a 6% drop. So that's a big drop in closed sales. Highest median sales price again for single family homes, but down for condos, and really the largest drop we've seen. I'll show you a chart at the end that goes over that. The median days on market were up big for condos, up to 48 from 39. And then single family homes down from 25 to 23. New listings show a big drop. No surprise there with the number of new listings. Month of supply for single family homes steady at 3.1 months, but up from 5.6 to 5.8%. Again, the number of condos staying on market is increasing in large part due to the increase in HOA dues across much of the condo market on our island. Let's break this down. Median days on market continued rise in days on market since September of 2024. You can see that gold line is condos. You can see it's still going up. You see a slight drop though month over month for single family homes, but overall the trajectory, straight line over the last 6 months for single family homes has gone up. And again, due to rates come down, those days on market go down, and we start seeing that curve go downwards even more. Let's look at new listings. You had a drop in new listings, which is normal. You look at every February or January to February, you see that every time with number of new listings coming down. But the next month, we gotta see them going up. We should see them going up, especially as you get people looking at the spring home selling season. And you know what? Normally we see new listings drop in January and then they go up. But quite frankly, we didn't see as big a drop as we typically see. I called this last month. So new listings down overall. We'll see kind of what happens in March. The March report that comes out, but expect those numbers to go up. They normally do. Active inventory, we are at the highest active level of inventory since before COVID at 2,888. While the number of single family homes dropped a little bit, we saw another increase in condos, active inventory of condos on market. So again, steady single family homes, especially between that 800,000 and that 1.4 million. That's kind of where the majority of the inventory is. That's where people are buying. And I tell you what, this increase in inventory really shows a balanced market. That is probably one of the reasons why we have the most balanced market, I would say, in Oahu since I've been in the lending industry, in the real estate industry in the last 8 years. More inventory, very balanced. I think this bodes really well for buyers moving forward. All right, so we had a drop in closed sales for this past month. You can see it's a steady drop in closed sales. Again, this is due to high rates. It's not people don't want to buy, but people don't want to buy at 7% interest rates. Condos have not been this low number of closed sales since January 2024, so really over a year. Normally we see an increase in February, but not this year. And that's largely due to, again, those rates going higher. Median sales price. Hey, is that elevator going up? Is that elevator going up for single family homes? We are getting near that $1.2 million median sales price line. And once we get there, we're probably going to stay there. Condos still overall steady, right around 500,000, but we've gone from 520 down to 494,000 median sales price for condos. I think we'll stay here. I don't think we're going to drop because there are a lot of condos on the market, but that is something to keep an eye on. I don't see them going lower. Really, though, I think they're going to stay in this general area for the median sales price. Let's look at the 10-year Treasury. All right, this here is important, all right? And this is one of the reasons why interest rates stayed. They didn't go any lower than where they are. We'll get into that graph in a second. But a lot of this had to do with market uncertainty this week. You have this blue line right across here. That's a 200-day moving average for the 10-year Treasury. And you can see we got below it, but some news caused us to go back up, and we haven't had enough good news. And while the jobs report was good news, there was other news that really kind of caused us to stay above the 200-year moving average. And I think next week, if we get some solid inflation reports that show inflation coming down, we may get below that 4.2, I think it's 4.26 line, and see a good solid drop down towards, the 413, the 410 line, and that will bode well for mortgage interest rates. Remember, the Fed controls the Fed funds rate. They don't control the 10-year rates. But if we see inflation come down, if we see some stability out of the economy, maybe the economy even gets a little worse, you could see that 10-year come down. That's a big thing we got to look at next week with the inflation report, and that is, where does the 10-year Treasury go? If it gets into the 4-point teens, that bodes very well for interest rates. All right, initial jobless claims. Initial jobless claims, pretty good. down 21,000, really a wash the last 2 weeks, but continuing claims up 42,000, up to 1.897 million people who are continuing to receive unemployment insurance or unemployment claims. So good number there. It remains to be seen what's going to happen with all the federal job layoffs. I expect that's going to have an impact on the jobless claims here, but there's still a lot of firings being held up in court. People are going to get laid off. All right, it's going to happen. The administration is not going to let their foot off the pedal to bring down government waste and overspending. And you know what? The most expensive part of our budget, it's the people. It's the people doing jobs that aren't really doing their jobs. They have jobs but aren't doing their jobs. So really, the hard part is, well, who do you fire? All right, and unfortunately, without getting too political, I think it's the right thing, but sometimes when you try and cut out fat, you get muscle, and hopefully we don't go to the bone. This is a tough situation we're in right now. We just got to let the dust settle, I think. Let's look at VA rates. Oh my gosh, so the Fed uncertainty over the economy really is what held rates from dropping below that 200-day moving average. You saw rates come down at the beginning of the week, down about 6.13%, and then we had this rise in unemployment. With the jobs, we had a rise in unemployment and lower expected new jobs. You would think that mortgage rates would go down, but they didn't, and that's because really a lot of things going on with the Fed, but also across the pond. All right, in Europe and European Central Bank, they actually lower their Fed funds equivalent rate, although they have inflation fears. So when you have inflation fears, inflation going up, you don't typically lower your Fed funds rate, but the European Central Bank did that. And that really caused interest rates to kind of reverse and go up across from their actions across the pond. What will we see next week here? The Fed's not going to cut. They're not going to do anything with rates next week, but we do get a couple inflation reports. We get the CPI, the consumer price index, and the producer price index next week coming out, and it really remains to be seen what we're going to see there. But if inflation continues to come down, even if it's just a little bit, then we could see those rates come down. And can we get in March below 6% on VA rates by the end of the month? It's possible. We'll see. All right, so what does this all mean? Well, hey, mortgage apps, with the rates going down the last couple weeks, mortgage apps rebounded up 9% last week. Refis are up 37% last week. I know I got several refinance applications in, just looking for that right number so that we can lock in some savings for clients. If you bought a home in the last 2.5 years and you didn't refinance in September, a lot of people didn't, you need to get with your lender because there's an opportunity to save some money. All right, and there's no guarantee that we're going to get below where we're at. We're on refis anyway. We're in the high fives. Rest, purchases, we're low sixes. But you don't know if rates are going to stay where they're at or if they're going to go up. There's no guarantee. There's no law that says rates have to go below 5.5%. Nothing out there that says that. But last time we had a big drop in rates September. We saw a lot more activity, and that really helped us as we got into the end of the year. You saw a lot more action in the market. Inflation week next week could help drop rates lower or they go up. And now let me tell you, sellers stay positive. I know a lot of people who have bought. They weren't necessarily my clients, but who've bought in the last 2.5 years. Now it's time they're looking at, well, do I sell my home or do I rent my home? And if I sell my home, I'm not making any money. A matter of fact, I may have to come to the table with money out of pocket. And I have run the numbers, all right, for clients. And even if you're paying up to $1,000 out of pocket, between the difference between the rent and the property manager and your GET, you are still going to make more money if you keep the home than you would if you sold the home. Remember, if you sell a home and you have to come in with $50,000 at closing, that's $50,000 you're never going to get back. All right, maybe you're $1,000 out of pocket every month. All right, it's going to take you 4 years to equal that $50,000. All right, what's going to happen in 4 years? Home prices are appreciating between 3 and 5%. All right, if they appreciate at 3%, all right, you're going to see $75,000 to $100,000 in equity gain over those 4 years. You will never see that if you sell the home. All right. And then you look at the tax benefits. Your investment properties are tax shelters for you. So do not give up. Do not give up. And I say that, I'm a guy who never gave up. When I had a house and I was under back in the Great Recession, sucked it up, made some extra payments, able to save it and actually come out on top at the end. And that's what sellers need to do now. And quite frankly, if I was a seller, I would be holding off. I'd be like Russell Crowe in Gladiator. Hold, April, boom, home's on the market, home gets sold. All right, that's what I'd be saying if I was a seller right now, and certainly if I was a seller agent. Hold it until April, put it on market and watch it go. All right, that's about all I have for you this week. You guys have a great weekend. We'll talk to you later. Aloha.